Good evening, everybody, and welcome, distinguished guests. We can see ourselves. Good. EIF members and colleagues and friends. It is my pleasure to welcome you here today. Our discussion named Digital Currencies, the Digital Euro and Cryptocurrencies, which I think will deal with an issue that is becoming more and more important and also more and more discussed among European institutions, which is the introduction of potential introduction of digital euro. We may be expecting some legislative work also next year on this one. So I'm really happy that we can take this opportunity and exchange on this issue and the state of play today. We have our distinguished speakers. So I would like to welcome Mr. Ignacio Terol, who is with us online and who is a digital euro product manager from the European Central Bank. We have next to me Mr. Jan Seysens, who is head of unit digital finance in DG FISMA, the European Commission. Again online, Mr. Juan Jimenez, CEO of Alastria Blockchain Ecosystem, Public Policy Director from Santander Group. I think we can see you now. And we have also with us Mr. Cesare Francassi, who is the Director of Economic Research and Chief Economist of Coinbase. So I would, in a short introduction, before or let's maybe start some housekeeping rules. I think we will start by presentations by all our speakers, some 5 to 7 minutes each, and then we will have some time for reactions, comments, discussion, and open floor for everybody. Before I pass the floor to our first speaker, let me just quickly give some remarks, as I mentioned at the beginning, on the idea of digital euro. We've seen, and I think you are all more or less familiar, or you came across various names of different new digital currencies or digital assets that are in the global and European economy, I think, more and more present. We all heard about bitcoins, and we all heard in European bubble about projects such as stablecoin Libra, etc., etc. Those are all basically new types of assets that are emerging. And the main feature of those assets is that they are, most of them, introduced, issued, run, traded, exchanged by private entities, by companies. If you look at this, then we can feel that there may be one aspect of this policy that is missing, and then where we have a public digital asset. Is it something like this possible? Would it make sense? And in this regard, I think the ECB has taken quite well. At some point, I think it was a good initiative to start exploring possibilities of introduction of digital euro. And I think we will hear more about it from the representative of the European Central Bank. There are various options why public digital assets or digital currencies can be introduced, or the central bank digital currencies. We can look at the Chinese user case when China decided not to allow any private cryptocurrencies, but would rather issue and trade the central bank digital currency, their digital yuan, which is in their pilot phase. So it's actually to sort of counterbalance the not allowed digital assets, or we can see examples like we are discussing today, or we will be discussing today with digital euro, or we can see examples like, for instance, in Sweden, where the economy is gradually becoming cashless. The amount of cash in the circulation in the population is very low, and most likely will be limitedly close to zero at some point. Hence the introduction and discussion by Swedish central bank about the electronic representation of Swedish crown. So I think these are also various user case why this debate should take place, and initiatives and projects such as Digital Euro should be explored. I think since the European Central Bank has started its work on the project, more and more discussions are actually held around Europe on the possible benefits and what this can bring. I think we all believe that there may be some potential in terms of allowing for new innovation based on the introduction of digital central bank digital currency that can maybe also help us to enhance, for instance, payment schemes that will be based on this infrastructure, and also enhance the ability of European companies to introduce payment schemes, and many others. And I think in this regard, the critical part of it would be what user cases will be decided, how the infrastructure will be designed, and what will be the acceptance of broader population, but also of businesses. And I think these are all questions that we may touch upon throughout the discussion this evening. So without any further comments, I would like to first pass the floor to Mr. Ignacio Terol, who is representing European Central Bank and who will give us his views and maybe views regarding the current state of play on the project from his perspective. So please, Mr. Terol, floor is yours.
The Eurosystem launched the investigation Euro project. We are now up through the investigation phase. And as you have mentioned, Chairman, many other jurisdictions are also exploring options for central bank digital currencies. We have worked very closely with the European Commission, the European Parliament, and the Euro area finance ministers. And we have also engaged closely with market participants, including intermediaries, consumers, and retailers, to hear their views. We have also organized focus groups to hear directly from more than 2,000 persons at random in all 19 Euro area countries. I will cover two aspects as solicited. Why might the digital euro be issued? And I emphasize might, from a public policy perspective, and why might persons wish to use it? So on the first question, if we take a broad historic approach, I've read Harari recently, whether money took the form of various metals or paper money, public money has always adapted in its forms to people's preferences as to what was the prevailing means of exchange. Kings, queens, or emperors would issue coins with their faces, not only as a means of financing themselves, but they also facilitated internal commerce because public authorities undertook the responsibility that all coins had the same standard weight in terms of metal content. So they provided the monetary anchor. In the 18th and 19th centuries, paper money became prevalent, backed by a promise of convertibility to gold. Multiple monies emerged as anybody could issue IOUs in the form of paper. So certain confusion emerged as citizens, confusion emerged with people about what is money and what was not, a bit similarly to the situation with crypto assets today. Eventually, throughout all countries in the world, the model that prevailed after the 19th century was to standardize all paper money, entrusting central banks with the issuance of banknotes and entrusting regulated banks with their distribution. For the last decades, we have had a hybrid model for payments. Central banks issue public money, essentially cash for individuals and reserve accounts for banks. The private sector relies on it to provide the total bulk of money in the form of commercial bank money. And key to this hybrid model is that citizens can convert private for public money at par, which ensures that all forms of money can be used indiscriminately for payments as long as denominated in the same currency and regulated by appropriately by issuers of and as long as issuers of money are appropriately regulated for payments throughout that currency area. So why are central banks throughout the world considering the possibility to issue digital money? And the general public could hold similarly to how they hold banknotes today. I would argue that the first and foremost reason is that people are increasingly paying digitally instead of using cash. With the decline of cash, even if there were no cryptos issued today, the question would still emerge. There are simply more and more use cases in which I cannot pay with a banknote if I wish, because it is simply a remote payment over e-commerce. In terms of preference, almost half of euro area consumers, when they can actually pay with the banknotes, they say they prefer to pay with cashless means of payment, such as cards. We will continue to provide cash, but if it is used less and less for payments, public money could ultimately lose its role as the monetary anchor for the hybrid model, threatening its function in securing trust in payments with implications for the broader economy. So as we see cash being used less as means of exchange while remaining strong as a store of value function, it could make to complement it with a form of public money, digital euro, for serving people's digital payment needs while having a limited store of value function. A second reason is that the entry of big techs into payments could increase the risk of market domination and dependence on foreign payment technologies, with consequences for Europe's strategic autonomy. Already now, more than 2/3 of European card payment transactions are run by companies with headquarters outside the European Union. So the risk of dependence on foreign payment technologies is a more specific European concern, which nor the US nor China face today. In neither of those jurisdictions, you would have a situations where 2/3 of digital payments are run by companies outside the jurisdiction. So issuing a digital euro would indeed safeguard people's confidence that €1 is €1, allowing them to convert private money into digital central bank money at par. It would ensure that money continues to be denominated in euros, and it would be based on a European infrastructure, facilitating intermediaries to scale payments innovation throughout the euro area and thus strengthen Europe's strategic economy. Let me now turn to the question of why might people wish to use a digital euro. And the best here, I think we can not claim at this stage that we have the answer. So the best is really to ask directly to the people. And this is what we did through the market research with more than 2,000 persons in 19 euro area countries. And I will share with you the results that we got. So the following features in order of importance were considered to be most critical by participants. Universal acceptance was considered the most important feature, ideally across the euro area. All merchants in physical and online stores would need to accept it. So it's the principle that it's always an option for the payer to pay with public money. If we recall when our respective countries did the change over to the euro, there was the hindrance to adapt to a new unit of account, but we could all experience the value back, at least for me, Spanish in 2002. We could all experience the value that we had banknotes where we could pay everywhere across the euro area. We have not had that equivalent in the digital payment realm yet, and at the same time, how we can pay with cash, so the use cases with which we can pay with cash are more limited now in 2022 than they were in 2002. So that's in that's something which emerged in our research across all ages and across all countries as something which people would expect from public money. Second aspect was instant, contactless, and open person-to-person payments. Instant and contactless, we experience every day. There's nothing new. That's why also we want to rely on intermediaries for this. Open person-to-person payments is important. Today, we can call anybody by mobile phone, irrespective of in which company we are working, we are contracting with. In payments, very often, if I want to make an immediate payment to my friend, we need to be in the same solution. It's what we call a closed loop solution. So that openness was something which was very valued by citizens. A one-stop solution was envisioned by participants. So they are not really looking for more payment solutions, but rather for a payment solution that can cover all their needs. Of course, here from a public policy perspective, we need to balance both this user convenience with resilience. We don't want an outcome in which any means of payment becomes so prevalent that we become too dependent on it for the continuation of commerce. Easy to use, secure, reliable, and fast payments with biometric authentication. So again, nothing new from what we experience today, but a very important feature for us to rely on intermediaries. And finally, cost efficiency. Privacy was also very much valued. As payments become increasingly digital, people wish to secure the possibility to pay privately as they do with banknotes. We should at least provide a level of privacy equal to that of current electronic payment solutions. And as a central bank, we have no interest to make a commercial use of private data. We will avoid to have the capacity to identify any single person making any specific payment. But still, we believe it would be desirable to go beyond the baseline today for digital payments, and we're exploring with the European Commission whether the digital euro could replicate some cash-like features to enable greater privacy for low-value, low-risk payments, including for offline payments. Ultimately, however, this question of privacy vis-a-vis crime prevention, finding the right balance as payments become more digital, that's a political choice that is for the co-legislators to define. So I will end by emphasizing that we will continue to engage with co-legislators, with market participants, including intermediaries, consumers, and retailers, with a very open mindset. The results of the focus groups I mentioned are from earlier this year, and we will soon repeat a second round of focus groups to again listen to the people directly, listening from them and understanding their needs. Thank you very much.
Once we have the ECB has fully investigated the issue, and once I think all the regulatory implications have become clear. And in that sense, from the European Commission side, we are currently focusing closely together, working with the ECB, but we are focusing indeed on preparing a legislative proposal which would indeed establish the digital euro, enable the issuance of the digital euro, should that then be so decided, and also set out a couple of key features. So in that sense, this is of course a legal necessity, but it is also really a way of indeed having a common and democratic process of deciding on this important project. And let me just mention what are the key, let's say, points and issues we are looking here, particularly then at from the regulatory and legislative perspective. So the first one is, of course, indeed this basic fundamental decision whether indeed, let's say, the empowerment for a digital euro is given. Is this necessary? Should the ECB kind of issue given the possibility to issue a digital euro? And that is already a quite fundamental choice. And I think, as Nacho also indeed pointed out, I think no final conclusions on this have been, I think, taken by anybody in Europe. On the one hand, indeed, I think it is important that public money remains relevant in the digital age as well. That is important for our citizens because, well, today I think some use cases, Nacho mentioned that, can only be, in certain instances, you can only pay by cash. Financial inclusion still for a number of people who are today unbanked is only possible via cash, basically. So some parts of the population cannot access digital means of payment. But also in the industrial side, indeed, let's say going forward, as more and more industry is indeed also being automatized, also technologies, innovative technologies, programmability is being introduced, basically. Indeed, those are things which can not be done certainly with cash, and to be seen indeed on this balance of public and private money, where the private money alone would be indeed sufficient for all these use cases. Indeed, as Nacho pointed out, I think we have our doubts. We do think that there is a lot of benefit of this hybrid model, where indeed you have a strong role for private money, and very often private money is the driver for innovation, but it is also underpinned indeed by access to and the possibility then to fall back on public money if that is necessary. So I think in that sense, on the one hand, I think we think there is a strong case. On the other hand, it is a decision which cannot be taken lightly. Indeed, we'll have to look very closely at data protection implications. Cash is not anonymous, but relatively, let's say, high, data protection for obvious reasons. So, of course, there are a lot of concerns. Well, how will that work with the digital euro? Will we be able to have something which is relatively private as well? And I think that is a key point which, of course, distinguishes Europe and any digital euro we could issue from the Chinese project, which goes clearly in a direction of, let's say, surveillance of the population. I think that's one difficult question. Another question is, indeed, what's the impact, what's the role of the financial sector actually in this? Indeed, of course, as we discussed, a big part of payments and also our personal financial management and our business's financial management is today done and is carried out very well by the private banking sector. So how will indeed a digital euro affect that, impact this? What also new possibilities for public-private cooperation it will indeed create? We think that there can be, if it is properly managed, and I think that's also the message we got a bit from the banking sector when we had our conference on this topic earlier this year. If it is properly done, I think there can be benefits for all sides, but it is indeed, it needs to be properly done. If you do it the wrong way, then you can also create a lot of damage. Because we do rely, of course, on our banking sector for a key part of the financing of the European economy, and that is a kind of a key factor and function which we must be very careful about indeed. So I think those are a bit the considerations in the different directions, and it is ultimately a political choice whether this step will be done. I think there's another element indeed, and I already set that out. Basically, is indeed then what are the key features and the key direction of travel for such a digital euro? I mentioned already privacy. I mentioned a couple of other points. How would a digital euro be accessed and distributed? Would there be a role there for the private sector, for the financial sector? I think we think together with the ECB, yes, it would be. But of course, the devil lies very much in the detail. What would be the acceptance actually by merchants? If you go to a shop, can you be sure that the digital euro is also accepted there? On the other hand, can we ask every corner shop, let's say, or every merchant on the market square here to accept a digital payment means? It is again a difficult balance to be taken. What's the trade-off? And also Nacho mentioned that between, on the one hand, the privacy, but on the other hand, also the fight against money laundering. We know, unfortunately, that cash is used quite extensively also for illicit purposes. And if we create a digital euro, if a digital euro is created, which is actually a vehicle for money laundering, I think then the trust in this will, if it is ever even created, will quickly disappear, and that is going to be not going to reach the purpose, the objectives you want to achieve. So that is also a balance which needs to be looked at and taken. So I think those are all matters indeed which we have consulted the public, both in writing and various fora, and I think we are now looking at the results of that. Our commissioners are indeed further consulting on this, and will then indeed present, I think in the course of next year, in the first half of the year, probably a legislative proposal, which would then ultimately, let's say, submit all these questions for indeed discussion and deliberation, and also decision to the European Parliament and the Council, because indeed those are the institutions which I think probably need to take these kind of important decisions. And that can then, if indeed endorsed and if in a way adjusted by the Parliament and the Council, can then be a basis for the ECB in the future actually to issue this digital euro. Retail digital euro for our citizens and businesses, and I think that would be a big step. We don't know yet when we will get there. We don't know if we will walk the path to the end. Sometimes in innovation, you also see that things take surprising turns. But overall, I think we are quite happy that Europe is, I think, by now in a good position in the analytics of all of this, also compared to other jurisdictions, because indeed it is important to think this all through, and every year and every discussion brings you new considerations, and that in itself is also a value I would see in this process. So I think we're quite happy that Europe is so pushing these reflections forward so much, and is relatively advanced in this, and I think that can also overall support indeed the competitiveness of our economy and our financial system.
Thank you very much, Jan, for actually broadening the context and raising a number of issues, and indeed some difficult political choices would have to be made in this regard. So now, when we heard from, let's say, the public side of the panel, I would like to now pass to our industry representatives, and would be interesting to hear their views on the proposals, on a potential proposal of digital euro and other aspects that are linked to it. And I would like to pass the floor to Mr. Juan Jimenez, who is the CEO of Alastria blockchain ecosystem. Please.
Yep. You hear me well? You hear me? Perfect. Well, first of all, thank you so much for having me. It's a real pleasure to share this panel with the members of the industry, and also with the people from a European Commission. Is a pleasure, and my apologies because I was not able to be there. I'd love to be there in Brussels with you, but it's been impossible due to strikes and then flight problems. But hopefully we can see you in person and discuss and catch up next time. I have a double role. I take care of Alastria, which is a blockchain association in Spain, pretty connected with all what is happening in blockchain in Europe. We have more than 600 members already, a combination of public and private members, both the corporates and the SMEs together, building blockchain solutions, and looking at what DLT, what distributed ledger technologies have for us, and seeking of the opportunity of implementing blockchain in different processes of the economy, and also looking for use cases for solving problems of real life. And also, I've been all my career in banking, and I'm part of Santander Group. I've been in the bank for almost 14 years already, in different roles and different positions, and now I'm taking care of all the crypto and blockchain public policy for the whole Santander Group. First, my views, or the bank views, when it comes to digital euro. I believe it's an excellent opportunity to showcase how banks can be partners and how can make a valuable contribution to developing this critical project. We think is an amazing project. It's full of opportunity, and we as banks will going to be there accompanying the project members. Let me also stress our support for the work that it's been done to set this up, and we're willing we're willing and ready to collaborate in creating the digital euro that adds value to all stakeholders in the European economy and also society. As you know, banks are at the core of payment services. We're in the best position to contribute with our expertise to a project that has the potential to transform Europe and the European payment service landscape dramatically. It would be worth strengthening the dialogue and collaboration with the banking industry on both technical work and more on the strategic discussion. For us, there are some key elements, and I think most of them has been already touched by Nacho, Terol, and also by Jan Sysons in their interventions. First, we think that we can all agree on the need to ensure the digital euro provides a real value to citizens. This is no-brainer. Banks can play a key role in bringing the digital euro closer to citizens, for instance, through the existing bank apps and the payment rails that consumers already use to manage their finance. Besides, the digital euro should enable European banks to keep innovating and providing new services to citizens. This is of foremost importance. Also, we consider essential to guarantee privacy and cybersecurity while ensuring AML and other controls that have to remain in place. Banks also have a long experience in ensuring the security of clients' data and privacy, and we have made massive investments during the last decades to be a trustable partner for our clients. At the same time, as it happens with other payment means, citizens should have the right to allow regulated intermediaries to use their data, ensuring both security and privacy to create personalized value-added services. It's also of foremost importance, this data as the ingredient of a recipe for the scoring and rating of the banks, as we are lenders to the ecosystem. The data generated from transactions is not only necessary for security and compliance with the AML and CTF requirements, but also to make personalized and innovative services for clients. Thirdly, the digital euro must be a real alternative to private stablecoins and other CBDCs and provide advanced capabilities for the private sector to drive payments innovation. To ensure that the digital euro is competitive, future-proof, and drives payments innovation, it would be good if it embodies advanced features such as programmability of transactions. And fourth, and perhaps the more important, we obviously share the concerns of potential unintended consequences of this intermediation, thus for financial stability. Non-controlled expansion of CBDCs as a form of savings or investments should be avoided, as it would challenge financial stability as well as banks' capacity to finance the economy. And banks can also help here to calibrate the digital euro features to mitigate this negative impact of this intermediation through our knowledge and expertise on the provision of credit on our clients' finance behavior. In sum, banks can and should be allowed to help to find the way towards a solution that adds value to citizens and be the catalyst of innovation in the European payment system and the economy at large. From a Alastria perspective, I would say we are organized in different sectorals and in different commissions. Identity is at our heart and is part of our DNA. Is the cross use case that we put together and we're pretty focused on, but not the only one. And in the different sectorals, being financial services, but also transportation and logistics, art, culture, industry, energy, well, the different type of sectorals, most of the players and most of the participants on these sectorals are looking at digital euro as the opportunity to bankerize their solutions and to bring the efficiencies, the promised efficiencies of using blockchain in these sectorals with a true digital euro that can bring programming features that match quite nicely with the blockchain technologies that we are implementing, not only in Spain, also around the EBSI different projects that I'm sure you're all familiar with. So I think there's a major responsibility with all the different players in Europe that are looking into the blockchain opportunity, into the tokenization opportunity as well, to bring a digital euro that is fit for purpose and can bring this so-called Industry 4.0 micropayments, machine-to-machine economy that we all talk about, but we need to figure them out and to have a mechanism to make these changes of currency in an efficient and seamless manner. I think it's all from here, and happy to jump into the discussion afterwards. And thank you again so much for this opportunity you bring to Santander Group and to Alastria blockchain ecosystem.
Thank you very much, Mr. Jimenez, for giving us your views on behalf of both the blockchain industry, but also on behalf of Santander Group. And I would like now to pass the floor to Mr. Cesare Francassi, who is the Director of Economic Research and Chief Economist in Coinbase. So please, Mr. Francassi, the floor is yours.
First of all, it's great to be here. I also have I can hear a feedback loop. I also have a dual role. I am the chief economist of the Coinbase Institute. I'm also a finance professor at the University of Texas at Austin. And what I'm going to say here is my personal opinion about CBDCs, and it does not reflect the official position of Coinbase. I really value my independence of being able to actually say what I really think. And so that's why the disclosure. So I actually prepared a couple of slides to provide my thinking about CBDCs and digital euros. Can you all see the slides? So so I basically have a lot of questions about CBDCs. The main question that I have is about product market fit. So this is a chart that shows different countries and how what kind of payment methods they use in stores. So this is not online spending; this is in stores, and you can see that the use of cash and checks is ranges between 20 and 30% of all the payment methods. Card-based, like debit card and credit cards, are vastly a lot more used. And then there is mobile payments, bank transfer, installment, and buy now, pay later, and payment points. So my first question when it comes to CBDCs is, what is the digital euro going to substitute? What kind of people are going to use a digital euro? Are the people is the idea that we want to replace people using cash to using digital euro? Because if that's the objective, I find it hard to believe that people that currently use cash, usually these people are probably less tech savvy. They are more interested in privacy. So I don't see how whether these people will be willing to switch from cash to digital euro. So if that's not the objective, is the objective to actually have people switch from using debit cards to a digital euro? And if that is the objective, what is the problem that we're trying to solve here? So especially, and I'm gonna show in the next slide, Europe, unlike the US, has a a very good instant payment system. The fast payment system are something that many different jurisdictions have been considering and implementing. Europe and India are at the forefront, and in Brazil are the forefront of having instant payment settlements. And so when it comes to when you actually buy something, you can use the tips. Tips has been used more and more over the years, ever since it was introduced in 2018. Is settled instantly in less than 10 seconds, is available 24/7, 365, and it uses central bank money to settle across banks. So effectively, there is no counterparty risk. So my big question is, my second question, in addition to the market fit, is what is the advantage of CBDCs over TIPS, over targeted instant payment settlement? So much so that actually in one of the speeches of the Bank of Italy, actually they say that TIPS might be a possible technical solution for the digital euro. And so when I put all this together, then the big question is, well, we already have a fast payment rail through the TIPS. We already have a bank account that people use. So then what is truly the added benefit of having a digital euro? So this is an important question that I think we need to have very clear answers. When it comes to okay, maybe it's just about cash. So how do we think about money? So we have physical currencies like the regular euro. We have commercial bank money, bank deposits. We have CBDCs, and we also now have also stable coins. And so each one has a different trade-off, in terms of credit risk, liquidity risk, cybersecurity risk, programmability, privacy, interoperability, ease of use, and cost. And so the question is, where does the CBDC create value relative to bank deposit, physical currency, and stable coins? Considering that some people might actually choose to use sometimes cash if they are more interested in privacy, for example, and sometimes they might be interested in using more stable coins if they're interested in programmability. So these are all these are the important questions about what is the advantage of using CBDC relative to stable coins and bank deposit, or even tokenized bank deposits. In fact, in my opinion, if I actually look at this chart, it seems that if you're not concerned about credit risk and liquidity risk, so meaning if you actually have a very well-regulated stablecoin, then to me the stablecoins are technically dominating CBDCs across a very large type of features. So when it comes to stablecoin, I have to make a comment about whether they can compete with CBDCs. MiCA stablecoin regulation is quite restrictive in how people can actually are going to use stablecoins in the future. Obviously, it's important. There are some criteria that are actually very important. Minimum liquidity requirement, minimum quality of safe assets as reserved. These are very important things, and it's very good that actually MiCA actually regulates in this way. But then he also limits how non-euro denominated stablecoin can be used. There is a strong cap there, and specifically across all the stablecoins, it actually requires a capital buffer of 2 to 3%, which is actually very, very high. So my main final message is, I think, yes, we can discuss the benefit of CBDCs, but I think it's also important to allow the flourishing of very healthy euro-denominated stablecoin. And so maybe in MiCA 2, version 2, we can actually provide recommendations and regulations that allow the flourishing of this alternative payment system. Thank you.